That's right. We have the correct intro this time. What's up, Bitcoin Season 2? You've got the writer's room, Charlie and Colin. What's up, Colin?
What's up, Charlie? Happy Friday, everyone. Hope you're all hanging in there. Hope we're enjoying fall coming in, the best season. It's cooling off. We've got
Yeah,
cozy season coming up.
speak for yourself. It's in central Oklahoma. It's hot as shit again. But I'm getting out of here. I'm going somewhere where it's even hotter, actually. I'm going to Singapore next week, which is why I got this microphone. Because I've packed my real microphone because your boy has to podcast on the road. These podcasts don't pod themselves.
No, they don't. We wish they did, but if they did, then we wouldn't be having any income.
Exactly. Yeah. So on that note, yeah, before we get kicked off, I'll be in Singapore, inscribing Singapore, Ord Summit Singapore. See you there. I'll be doing some content. Then I'll then also on the back end of that, head to Amsterdam for Bitcoin Amsterdam. I'll be speaking at all these things. So make sure to reach out to me and find me. But without further ado, Bitcoin Season 2 brought to you by Blockspace Pod. This is the writer's room where we are the writers of Bitcoin Season 2. This is where we workshop in the screenwriter's room what Bitcoin Season 2 looks like. Who are the main characters? What are the story beats? What are the story arcs? And we've got a big one today. Because fuck it, we fractal now, right, Colin?
we fracked, baby, fracked.
Baby,
as y'all have probably seen on the Blockspace newsletter, we have been, and on the website at Blockspace.media, Charlie has been putting out some amazing coverage of Fractal Bitcoin in its earliest days. And I know that people probably think we're shilling it. It's part of why we're doing this writer's room episode, because we have a lot of qualms with the way that it's designed. There's a lot of clowny shit going on. And I mean, it's degen land, so you got to expect some clowny stuff. But we're kind of becoming a one-stop shop for a lot of Fractal Bitcoin coverage. And for today's writer's room, we are going to be diving into a lot of what we've seen over the last week, some commentary over how Fractal is designed, and yeah, some kind of complaints that we have with regards to how this thing is set up.
Yeah,
Embrace tracking.
Exactly. Indeed. Yeah, exactly. Like a lot of people think that this is a fractal shill, but no, we've been talking about fractal for a very long time. If you want to know how it works, do some deep dives in the newsletter. And I did a whole long interview with Lorenzo. He's like the guy Unisat leading the charge on building fractal. I don't think fractal needs any more tailwinds right now. Like everybody already knows it's the place to go degen. So here, Colin and I are at the back end of the week. We're going to throw some wet blankets on this, which does not necessarily mean, which I want to be very clear, it's not trading advice. In fact, historically, you want to counter trade, both Colin and I. But I think it's time that we go through and point out the unsustainable longevity of this blockchain without significant changes. So I think maybe the first thing is let's just get into like I think we workshopped a headline for a newsletter, which is like Fractal Bitcoin may be a victim of its own success. Can you explain to me like this idea of like the size of a blockchain, Colin, and like what's going on here?
You want me to block-explain you for a second?
Yeah, explain it to me, baby.
So yeah, thanks for pulling up this chart. So where to start? We'll start with Bitcoin. So Bitcoin, as most of y'all know, has a block size limit of 4 megabytes per block. The reason for this is multifold. Primarily, you want to make sure that the chain doesn't get too large that people can't sync a node. You also want to make sure that blocks aren't so large that you have latency issues when you're publishing new blocks and alerting the rest of the network that you found a block. If you have blocks that are too large and that data takes longer to reach the rest of the network, you have a greater chance of a chain split and a greater chance of a reorg as two different chains emerge from the mining community. So we see in this, the problems with this, with BSV, both of those, that has reorgs consistently, BSV being Bitcoin Satoshi's Vision, a fork of Bitcoin Cash led by Craig Wright. And it's constantly had reorgs, and the chain size, I just looked it up, it's at like 10 terabytes.
The thing is, like, BSV is actually too big that I cannot get good data on it.
Yeah.
But blockchain data providers have sunsetted servicing the data about BSV like as a product. Even like the good ones like Blockchair, like just don't do it anymore.
Yeah, it's a good point to make because no one can run the architecture. And like currently, the most recent update we have for BSV, according to BitInfo charts, is it's 10.5 terabytes. That's insane. Bitcoin is currently 600 gigabytes. But Charlie, if you could actually
Yeah, let's pull it up
reshare
here.
that really quickly. So Fractal Bitcoin has 30-second blocks as opposed to Bitcoin's 10-minute blocks, and it has 4 megabyte blocks, but with the 30-second block times, blocks are coming out obviously more quickly. As a result, if we extrapolate the current level of growth that we've seen with Fractal Bitcoin as of September 11th, unfortunate timing on that timestamp, but anyway, as of this past week, we could expect Fractal Bitcoin's chain size to bloat to 1.2 terabytes by the end of the year and 1.6 terabytes by the end of January.
So
Now
why
that
is that
assumes
why is that a problem though?
because for a number of reasons that I kind of just explained, right? So no one's going to be able to run this architecture, right? Very few people have 2 terabyte, 1 terabyte hard drives lying around for running a node or their computer or anything like that. Additionally, you're going to have those latency issues that I talked about when you're actually publishing block data to the rest of the network once miners find a block. So at the end of the day, kind of TLDR, Fractal Bitcoin, if it continues to grow at the rate that it is, it's going to be very unwieldy very quickly. We should expect to see node centralization if it's not already centralized already, right? Like I can't imagine how many Fractal Bitcoin nodes are out there in the wild. I assume the mining pools that are mining Fractal are running them. Obviously,
So
the
you would
factories
act so
themselves
this
are
is
running
actually
them.
a funny this is actually funny because Colin, you don't live in like the degen world that I do. So the like all the activity on Fractal over the past week, in order to mint this like cat token scheme, you actually had to run a Fractal node. So you saw degens en masse
Mm.
sync full Fractal nodes. So I think actually as we speak, the number of nodes during the initial bootstrapping of this blockchain are very, very high. But what you're saying is that very quickly, like you can't run this shit on a MacBook Pro. In fact, you probably can't even run it on like some dedicated hardware anymore. Even if this pace keeps up after like half a year, like now you need enterprise grade server software. Oh, I saw BitGod in the chat say, what's the Twitter at of the guy on the right? It is as I lay hodling, HODLING, as I lay hodling. So yeah, like this becomes a thing where, given its current usage, it will almost certainly centralize to a few number of service providers. Now, you as a listener, do you care about that? That's a decision you have to make because, like, some people don't find that as much of a concern. I think if you are a person who's like, I care about like the robustness and decentralization of these systems, this would be a big red flag long term for you. So, given these tools and this information, like this is the trajectory we're on. And I mean, I'm just going to take a look at like the current like blocks. Let's just take a
And
look. Yeah.
to Steelman really quickly, like we're criticizing it, but this is why sidechains and experimental layers exist for Bitcoin, right? Like, we don't want this going on the main chain. So maybe it's fine if it's going on in Fractal. I think it's just important for people to know. And quite frankly, I mean, I don't, if Fractal Bitcoin centralized, I'm not really going to lose sleep over it. Maybe the team tries to do some funny stuff with controlling the software, but I mean, it's just, you kind of have to assume that these things are going to be like this, right? Because they're trying to do things that Bitcoin can't do, and that's fine as long as there's informed consent about what you're opting into. I think that the Ethereum ecosystem was pretty bad about this to put them on blast as every as a time honored tradition as a Bitcoiner. But
Yeah.
they've had a lot of marketing speak that made things seem different than the way they were. And this is still kind of going on. And I think that's why a lot of people, even on that side of the aisle, are kind of fatigued with it at this point. So, anyway.
Yeah, I mean, I'm just going to look at this. The fractal blocks are full. So if we look at this is the Unisat Explorer again, this is like the only real Explorer, I think. So it's, and I don't run a fractal node, so it's hard for me to actually verify this, but the blocks are still, even today, 3.5 megabytes. That's close to the maximum of 4 megabytes. So like we're on day 2 or 3 of these blocks being
So yeah,
very, very full.
usage is up, and can you go to the hash rate charts really
Yeah,
quickly?
so this is it. This is a whole nother. This is. I
Yeah.
almost think we could probably talk about the game theory of
Yeah.
mining here, because that is actually where I think the perhaps real concern. Because we're not like actually like we don't like you mentioned it, Colin. Like I think it's actually cool to see people experiment with side chains and to
Right.
see what incentivizes degens, and it's actually a really good case for like cat proponents to say, look how you may not like it, but this is what peak user demand looks like, and
Yeah.
it's cats all the way down. So there's a very, very big pro op cat drives user demand argument right here. However,
100%.
this is we get into the hash rate here, and this dynamic could be very spicy.
Yeah. So
Um,
do the 7 day, because I think it kind of shows
okay.
what the point I'm about to make. So for those who don't know how Fractal works, if you haven't been reading Charlie's wonderful dispatches, I suggest you do. But Fractal Bitcoin has a special consensus mechanism that they call cadence mining. Fractal Bitcoin is a merge mine sidechain, and what that means is Bitcoin miners who are hashing with the SHA-256 algorithm, they're mining Bitcoin. They can point their hash rate simultaneously to the Fractal Bitcoin network, and they will mine Bitcoin and Fractal in parallel. So this doesn't mean that they have to switch or point to a different network. They're literally mining both chains at the same time. And we've seen this with other side chains like Rootstock, right? It's pretty popular. So, but the thing about the cadence mining system that Fractal Bitcoin has put into place is that 1 out of every 3 blocks will be produced by merged miners, and then 2 out of every 3 blocks will be produced by fractal only miners, what they call permissionless miners on the fractal system. Now, this is really important because explains what you're seeing currently with this divergence, and not really divergence, but the fact that permissionless mining on Fractal has accelerated over the week. Now, in order to maintain this system, I know some of you might be thinking, wait a second, if you're mining in 2 different ways, then how do you make sure that the difficulty doesn't get all wonky? Well, the merged miners have their own difficulty and their own target that retargets separate from the permissionless miners on Fractal. So 1 out of every 3 blocks is merge mine, 2 out of every 3 blocks is on Fractal only, and each of those contingents have their own difficulty target and difficulty adjustment. So you basically have 2 separate mining entities on Fractal. You have merge miners, and then you have Fractal only miners. So this creates a game theoretical kind of scenario where as the Fractal Bitcoin price rises and as Fractal Bitcoin fees increase, we should expect the Fractal only hash rate share to rise. And that's exactly what we're seeing in the permissionless mining chart right here on the right. So you can see it starts off and kind of plateaus in the first few days, but Fractal Bitcoin's price started ripping a couple of days ago. As Charlie just mentioned, blocks are fat, so they are plump with fees. And we have seen the share of Fractal hash rate go from about 13 or 12 exahashes a day after launch to about 40 exahashes currently, which is quite a lot of hash rate. I mean, to put that into perspective, the entire Bitcoin network is 650 exahashes. So
Yeah,
this
this
thing on the permissionless side, on the fractal only side, almost has like a sixth or about a seventh of Bitcoin's hash rate. Meanwhile, the merged mining contingent of Fractal is roughly a third of Bitcoin's hash rate, as
and
we're
this is really
broadcasting.
interesting because where is that hash rate coming from? Because these are
Yeah,
because this is if we consider that hash rate is really just the physical deployment of these rigs worldwide, lots in China, Russia, USA. Um, like these are now a couple dozen exahash pulled probably from other SHA-256 mining, likely Bitcoin, towards Fractal. So
yeah.
this is now a zero-sum game between mining Bitcoin and mining Fractal.
So
It's
this is
actually
an interesting point, and I just realized that said something maybe stupid in a newsletter recently where, or maybe it was the mining pod roundup yesterday for the news stuff. But Bitcoin's hash rate recently hit 700 exahashes. Now it's down to 650. I chalk that up to miners dropping off because of difficulty and because they're getting squeezed. That might be because you have
No, look at
miners.
this. Like it's too early to tell because of like normal hash rate variance. Like we all know these lines go up and down based upon block time and yada yada. But like we might actually be seeing, like, if you look, the last two peaks here over the past couple of days do indicate a slight pullback in Bitcoin hash rate. Like
Yeah, and
this could be
I'm
because it's pulled off of Bitcoin and pointed to Fractal. This is
yeah,
crazy.
that's what I was gonna say. And I'm looking at the 3-day on hash rate index, and it's down to actually 600 exahashes. And if you look at the 7-day, it's down to 650. Like Charlie said, it's too early to tell, but we can actually look. If you'll hop back over to the Unisat Explorer, we can
I'm gonna,
see, for instance, that F2 pool is like they have 10 exahashes on Fractal, and then they have 40 or 50 exahashes on the merged mining for Fractal. So F2 pool is fragmenting their hash rate. They've got about a fifth of it pointed towards Fractal only mining, and then they've got the rest of it merged mining.
look at that, September 8th. That
Yeah,
is the day Fractal launched. Bitcoin hash rate's been down.
yeah. Here, can you go back to Unisat really
Yeah,
quickly?
yeah, yeah.
Sorry. I'm glad you pulled that up though, because it does indicate that. But if you scroll down, you see F2 pool has peeled off some of their hash rate. That's probably self-mining hash rate. I would imagine they can't, obviously, or maybe it is F2 pool miners who were pointing to Fractal through F2 pool. We don't know if this is F2 pool's hash rate that is their own proprietary or if it's their users. Regardless, you can see that they've got 10 exahashes pointed towards Fractal only mining, and they've got 50 pointed towards the merged mining. And then you've got Spider Pool doing the same thing. They've got more hash rate actually pointed towards
Yeah, that's
Fractal
crazy.
than
Spider
they
pool
do
is
on the
now a
merge mining.
Fractal pool.
So we can verify this actually pretty easily. Over the next few days, we will be able to see this show up in the blocks that these pools are mining on Bitcoin only. You should be able to go to either hashrateindex.com, mempool.space also has this, btc.com I think has this as well. They'll show you the share of blocks per each pool on different time frames. So you have like 3-day averages, 7-day averages, and 30-day averages. We should be able to see these miners like F2 pool and Spider pool who are mining this. We should see their share of the Bitcoin network decrease just a little bit. I also want to point out that there are some names on here that just I've never seen. What is Moon X? Is this a spinoff from a major pool? That's a lot of hash rate. That's 7.4 exahashes.
Moon X is just one of like the small. I think it was like a small mini pool that was just like, we're gonna make it really easy to mine Fractal only, and I think they managed to capture a lot of the cloud miners pointing to them early. Yeah,
Okay, that would make sense.
which is a whole.
So,
We can talk about cloud mining. I actually want to bring up a couple comments that Hobart from Starkware actually mentioned. Can you explain the strategy behind uh, doing just merge mining, doing specifically
so
Fractal? Yeah,
can I take this, Charlie? Because I'm
go for it.
excited about. Thank you for the question, Hobart. So the strategy is basically just what's more profitable at that time, right? So early on when Fractal launched, the token price just got crushed because for a number of reasons, including maybe, insiders cashing out, but we'll get to that later. And when that happened, their miners were more incentivized to do merge mining because you're simultaneously making rewards from the Bitcoin network and you're making rewards from the Fractal Bitcoin network if you're merge mining. And remember, these merge miners are only mining 1 out of every 3 blocks. So when the token price rises, they are incentivized to hop over to Fractal only hash rate where they are winning 2 out of every 3 blocks. And if those block rewards supersede what they are making from just doing merge mining on Fractal and on Bitcoin, then it makes sense to them to jump over. So it's basically, if the miners see that they can make more by only mining Fractal Bitcoin for a number of reasons, be that transaction fees going up, be that Fractal Bitcoin's price going up, they're going to hop over and mine only Fractal. But if they think they can make more money by merge mining, then they're going to do that, right? And a lot of them are probably going to, there's still more of them merge mining. And that's kind of like probably them playing it safe. Yeah. So the 1 out of 3 is really important. I want to reiterate this. 1 out of every 3 blocks is from merged mining only. And so
and
that
that's
kind of caps
probabilistic.
how much you can
Yeah.
make in a way.
That's
And then,
a 1 out of 3 target as well, I'll point out, in that it's not precise, in that they have 2 difficulty adjustments. One is the Bitcoin side merge mining difficulty, and one is the fractal only difficulty. And I guess they have some. I don't actually. I'd have to ask our technical consultant Sai for if they act like how they monitor the two. But yeah, it'll rebalance about daily, a difficulty readjustment daily to target a 2-to-1 or 2-to-1 fractal to Bitcoin ratio, or yeah, 2-to-1.
yeah, that's a good point to make. Because if the difficulty rises too much on the merge mining side, right? And there's like a bunch of miners who drop off, they might actually have trouble finding that block, right? And you might get a
Yeah,
many more fractal. So on that note, like this cadence mining thing, it seems to be working so far, but I haven't. I'm not gigabrain enough. I haven't thought about it enough. It seems like there could be some fuckery that results from this, though. I
dude. Yeah,
mean,
it's like my fuckery senses are tingling, and I can't figure
yeah,
out exactly
like
what the fuckery
yeah.
is. But I'm just like, okay, I did. What's funny is like, I'm surprised. Are you aware of anybody coming up with anything like this before?
No, this is totally novel as far as I can tell.
So we gotta hand
Um,
it to them. Like, this is
yeah.
novel, and
It's interesting. I
yeah,
mean, look, it's spawned an entire week of block space coverage, right? Like it really is a fascinating thing. That's not an endorsement to go put all of your hash rate on it or buy fractal tokens. I don't think that you should do that unless you want to degen. But at the end of the day, like it is a very interesting system. And seeing how it's going to evolve, I think uh, will be fun for us over the next year because quite frankly, I don't know what the usage for like rootstock and sovereign are, sovereign being rootstock's first kind
yeah.
of DeFi platform, but I mean side chains have really always been hyped up, but they've kind of always been
They've been the
kind of
stepchild of like the Bitcoin ecosystem for a long time.
yeah, yeah, right, they have been the stepchild, the ignored stepchild who's kind of sitting there clutching
What?
his pearls in the corner. There's no porridge for him. He cannot have some more.
Yeah,
But
that's what Liquid's been like. Rootstock is plagued by many issues, but it's 60% of the Bitcoin hash rate mines rootstock, I think, last time I checked, as of a couple quarters
yeah,
ago.
and
So
that
we have,
makes
yeah,
sense because you can it's a little bit of extra income. It's not going to change much for these pools, but it's worth doing because it's
but
an easy
Fractal
type
is
of
now
program.
material. So Fractal
Yeah,
fees per the same unit of time flipped Bitcoin fee revenue, and I think it is still flipped. I'm actually I
I
the
mean, it was
problem is
by
like,
a factor of like 4, right? So for the
yeah,
newsletter a couple of days ago, or yesterday, or actually, sorry, today's newsletter, we mentioned that yesterday when we were running the numbers, it was like 17K uh, US dollars worth of fees every 10 minutes on Fractal versus 4K on Bitcoin.
yeah, it's wild. Now, one of the problems is that I can't, like, there's not any good explorers except for Unisat's front end, so I
Yeah,
can't
and Unisat
export
is
the data.
pretty lacking, honestly. There could be a lot
Yeah.
there could be better tooling.
Also, it's a mempool at space fork. The colors clash. Oh,
Yeah, the color clash is pretty bad. I would like to see if you're listening to this, Lorenzo and team, could we get a fee aggregation thing,
yeah.
please? I would love to see fees over time. It's really difficult to audit right now. I'm not going to download a node. I'm sorry. I'm just
Yeah,
not
I'm
going to
not gonna
do
run
it.
an e-node either.
I'm not going to run this just to pull data. Seems like too much of a headache. But if you could get some fee data that's cleaner than what we have right now, some researchers and writers would be very much
Yeah,
appreciated.
because this is super interesting. So, I know we just asked them to help us out, but now we're gonna go to the next topic, which, uh, I wanna be tactful, but I also wanna be honest about this. So, this is, the reality is, if you're watching this viewer or Degen, you probably know that half of the fractal supply was pre-mined. I would actually say that it wasn't even, if we want to define pre-mine technically, a pre-mine usually actually requires hash rate to be deployed and energy and computation to be expended so that you actually generate a heavy chain. In this case, this is hard coded. Half the supply in the Genesis block goes to an address. I want to make a big I want to actually emphasize this because pre-mine on proof of stake looks like that, but pre-mine for proof of work blockchains are typically actually something which has been mined prior to the public opening of the chain, or the Genesis, like the Genesis public Genesis block, if you will. I'm not sure if those terms are correct, but in this case, half of the tokens of the 2.1 billion, 210 million tokens. How many bro?
That's a lot. I believe it though. I
No,
feel like
there's
that's
210 million. Okay, 210 million total fractal
oh,
Bitcoin.
okay. So it's
They're
just
just they're skipping ahead in epoch. So basically, it's a faster issuance schedule. It mirrors out of Bitcoin just with difficulty with halvings every 2 years as opposed to 4. Okay, that's really simple. But we have to look at where do the investor unlocks? Where does that half of the first pre-mined Bitcoin go? Now, if we
nobody
consider
knows.
last cycle's DeFi meta was a very egregious, what's called low float, high fully diluted value meta, which is you issue a bunch of tokens and you hold on to 80% of them, and the public market gets 20%. And then the hoi polloi, the people out there bid on those 20%, while the lion's share of the tokens are held in investor or certain early allocators' pockets. And this creates a malincentive where the investors are uh, basically looking to use retail or the public as exit liquidity. And after a couple of years, we saw that this particular token issuance structure has been widely rejected by the market over the past couple of years. All those tokens are down because nobody wants to own those. They feel that VCs are dumping on their heads. So
Yeah, and they're just
in the light
blatant
of
cash
this,
grabs, right? I
yeah.
mean, and so I don't really understand the terms here. Like, so they have a 5% pre-sale for Fractal Bitcoin, and this was used to fund early development. But it says all tokens under this pre-sale are locked up for 7 months and will be linear released until the 12-month mark. I don't know what that like. So after 12 months, they're just all unlocked. When is that 12-month mark? I'm
Yeah,
not
so
really.
we'll say, so first of all, of these 50% of the pre-mined, there are various categories. There's the ecosystem treasury, there's the pre-sale, advisor, community grants, and core contributors. And they're allocated each a few percent. And some of those are allowed to be unlocked according to some contractual agreement. This is not, I believe, enforced in the actual blockchain consensus, but I believe it is. These are probably like corporate agreements for people who helped bring this blockchain to market. And going back to what you were talking about, Colin, about is it the pre-sale? I think.
Yeah, it was the pre-sale, which is kind of almost like a Series A or like a like a pre-Series A, like a seed round. They're basically selling them to investors with the intention of using that money to bootstrap the network. And these tokens were ostensibly sold at lower prices than what we have right now. And it seems like they're locked up for a period of 7 months and will be linear released. I don't know what linearly released is supposed to
Until the
mean.
12-month mark. So for 5 months, that's basically each month they can sell 1% of their token allocation. So if we do some
Okay.
back of the napkin math, it's 5% of 210 million. So it would be 21 million divided by 2, so 10.5 million tokens. So in month 7, 20% of 10.5 million, so 2 million fractal Bitcoin get unlocked to sell just from the pre-sale. Um, so
But
that's
what
month
is this
7.
until the 12-month mark? What does that mean? Like, I don't understand what that's supposed to
After
be
the
saying.
12-month mark, the full 5% of the pre-sale will be unlocked. So at month
Got it.
7, I believe month 7 or maybe month 8. I'm not sure exactly how we're doing the calendar, like,
Yeah.
countdown here.
When does this start? Like, we don't
Yeah.
even know.
Pretty
That's
sure it
the other
started on
thing.
pretty sure it started on, like, Saturday or Sunday this past week. Anyway, but okay. So we'll see. So that's 2 million a month coming, unlocked, which can then be sold. So let's assume that's sold. So that's 2 million a month just in the pre-sale. Then advisors, 5% of 5% tokens given to the advisors. I feel like I'm reading like the Rings of Power, like 5 5 to the Elven Lords or okay. Okay, so
Oh my god.
5% to advisors.
So 20% of this allocation can be used each year for 5 years.
Yeah, and those go to advisors. I don't know who decides who the advisors are, but these are allocated to pay people for advising on that. So 20% of the total pool for the 5 years. That's another 2 million tokens per year in potential sale pressure. Um, hello, Google me, bitch. Can't believe nobody found this channel yet. Thank you. Okay, then
Thank
we
you
have
so much.
yeah. Then we have
Please,
community.
if you like this, please go follow us on Twitter at Blockspace Pod, and
Yeah,
subscribe to our YouTube channels. Bitcoin Season 2.
yeah. Okay, so then we have community grants, which are 10% of the tokens allocated to community grants, established partnerships, liquidity programs, initiatives, aimed at boosting network engagement over time, community directed. So that's interesting. So the community gets to decide who will be able to dump on them.
And who is the community? What is the voting system for this?
That's a good question.
This is like, so what's wild about Fractal is it's like this, it's actually a perfect name because it's this fragmented kaleidoscopic collage of all of almost like some of the worst ideas that we have seen since like 2018. I mean, there's
Bro,
like
Colin, I think you
DAO,
just missed
there's
DeFi,
there's
dude.
there's like DAO governance stuff here where like the community will decide things. Well, like who's the community? How do they vote? Is this a democracy? Or is this, just like robber baron capitalism? What's going
Pluto.
on?
See, Colin, I think you were just blissfully insulated from the DeFi shenanigans last cycle
I
because
think I think you're right. And my
I'm
bank
telling you,
account shows for
the
it.
low float, high FDV meta was rejected by the market, but we actually realized it was only rejected when applied to proof of stake chains. When we
Yes.
put proof of work, we give it some credence, and
We breathe
so
life into it.
yeah, let's run the shit back because we're producing hashes.
Yeah, there's real work behind this apparently. And
Yeah.
there's
Okay.
there's
So
there's labor behind the degenning.
yeah.
Um
Okay. So
But
10%.
I
Yeah.
just want to
Keep
finish that
going.
last point. This is a confluence of stuff that has been talked about since like the 2017, 2018 cycle. I mean, like DAO governance. I mean, they're not calling it a DAO, but I'm just saying the community thing reminds me of that. Side chains, kooky new consensus mechanisms. You can't not love it. This is financial nihilism. This is this is
This is a man
postmodern
who just discovered
finance.
meme coins, apparently.
Okay, well,
Okay.
Fractal's
Okay.
never gonna. Unisat's never sponsoring us after listening to me
Okay.
rant about
Oh God.
this.
Well, I mean, clip us saying that this is one of the more interesting experiments we've seen, and
Yeah,
it does. We will have to admit it introduces some novel mechanisms into the Bitcoin and blockchain ecosystem, which after 15 years, kind of amazed that I haven't heard of these ideas. So credit where it's
um,
due. Yeah.
my price prediction is $0 eventually.
My price
Um,
prediction is $200 before the end of the year.
oh, is
Neither of
that
these are.
sincere?
Yeah, dude, I can totally see it going.
I could see that, but this is not financial advice.
Not
That
financial
is
advice.
this is a bit. This is like Tim Dillon's Tim Dillon's podcast. None of this is real.
we're just like Tim Dillon. We're fat on the couch yelling about stuff.
Chain smoking
Yeah.
cigarettes in a shrill
Yeah.
Long Island accent.
We watch Alex Jones, so you don't have to. Okay. Okay. So we're through the community grants. So assuming that all liquidates, we're looking at 8 million tokens. No, we're looking at something like 20 million Fractal unlocked over the next year. Core contributors 15%. Tokens locked up for 7 months. Linear release until a 12-month mark. So that's starting month 7. I think 6 million tokens. So starting month 7, you have 8 to 10 million Fractal Bitcoin unlocked, which can be dumped on you. So do the math. Hey, if you're bullish on it, do you think there's enough buy pressure there to buy into that sell amount? Because if
I mean,
that's a
it
lot.
really sounds like not financial advice. Don't don't do this. But it really seems like there's going to be a Goldilocks zone for this thing where
Yeah,
it's going like the bull case for this is that it continues to be used and it could rip. And then when a lot of these unlock happens, it's going to hit a wall of sell pressure. And you probably don't want to be in it at that point.
this has been my prediction in my degen side chats. Where you just kind of spitball like random shit ideas. This has been my working mental model as I kind of work through like this stuff. Because you'll listen to me, people. Like I'm not bearish Fractal on a shorter timeline.
I'm not bearish anything on a short enough time frame, assuming, degen trade, I don't know, degen kind of sentiment.
I'm gonna save you here. We're gonna switch topics.
Yeah,
We
thank
got
you. That was
we got 10 more
I
minutes. We got
sat
10
there
more
like I
minutes.
don't know
Okay.
what's going
So
on.
this is the other interesting thing that I don't think has been appreciated by the market. The degens know this because the degens are strictly utilitarian. They need Fractal Bitcoin. They'll fucking figure it out. So what we've seen is in lieu of these degens standing up megawatts and megawatts of Bitcoin mining data centers, they go and they find where they can get that hash rate even at a premium. Cloud mining, the other stepchild of Bitcoin. This is all of the disaffected children of Bitcoin all coming together.
It really kind of is. It's like it's the reverse Avengers. It's like the B list Avengers. Like now's our chance.
The Revengers.
The Revengers.
Okay, so here we are. Okay. So I've got the BD of NiceHash. Again, NiceHash starting tomorrow, I think today, sponsors some of the block space stuff. Shout out NiceHash. I think they see this trend happening because what happened is you can buy hash rate. You can buy basically hash rate delivered to a stratum address or pool of your choice. You pay some Bitcoin, somebody will point a machine or machines to a pool that you want, and you'll get the Bitcoin mined from it. So you can do this with Fractal because you just buy what are machines which are otherwise mining Bitcoin, have them mine either merge mine Bitcoin and Fractal or just mine Fractal. So you can point this like cloud mining to these pools and you can get your Fractal Bitcoin. That's just the best way to do it right now. Now that requires somebody on the other end to be selling this hash rate to you. So it requires an actual physical data center somewhere. And what we're seeing is there are marketplaces such as NiceHash where they provide kind of a marketplace for these, and their rate has skyrocketed. We got a quote from Marco here at NiceHash that says it's common, rarely do cloud mining contracts trade in even with Bitcoin hash price, but they're normally within like a percent or two. We've seen a multiple that is 100% over like hash price trading on these marketplaces. So he even gives some numbers here. This is this morning. And if FPPS hash rate is 0.069 and the same hash rate on NiceHash, that's the cloud mining, is 0.139. That's double over spot hash price. This is, I think, one of the big narratives is that this has created a very, very interesting dynamic across cloud mining marketplaces. What are your thoughts, Colin?
Yeah, so I mean, you kind of put it all out there beautifully, Charlie. I want to share my screen really quickly to show people what these marketplaces look like, and also just add a little bit of color.
Yeah, go for it.
So, like Charlie said, for cloud mining, what you're basically doing is you are going to a marketplace and you are going and paying for the right to use someone else's hash rate that they're operating, but you're just kind of borrowing it, you're renting it, you're leasing it for a certain amount of time. Now, this is the hash rate marketplace. They call it hash power on Nice Hash for SHA-256 Bitcoin hash rate. Now, as you can see here, I'm going to demystify some of this. The top, well, we'll go over here maybe to the EU one. This top one is priced at 1.28 Bitcoin per exahash per day. To put that into context, right now, that's for you're buying hash rate for 1.28 Bitcoin for 1 exahash, which, to put that into context, the total Bitcoin network is like 650 exahashes currently, right? So if we break this down into another unit that miners usually use for hash price is a metric that basically is a kind of market standard for how much a miner can expect to earn for their hash rate every day. Right now, hash price is at, according to Hash Rate Index, a Bitcoin mining data site run by Luxor, you're looking at 0.00069 BTC per petahash. There are 1,000 petahashes in 1 exahash. So for these cloud mining marketplaces, it's 0.00128 Bitcoin per petahash of hash rate. That's an 85% increase on these cloud mining marketplaces. So the people selling their hash rate on Nice Hash currently through this cloud mining marketplace are making nearly double what they could be making if they were hashing with a standard Bitcoin mining pool given current mining rewards. This is really important because cloud mining has been getting squeezed since the halving. Because what you're basically doing is you're trying to rent computing power out to people in a way that's advantageous for them and you, right? Like, if they don't think that they can actually earn money from it, they're not going to rent it. So when hash price is at an all-time low, which it has been since the halving, it's really difficult to sell hash rate to people, right? But now they have something like Fractal where they can be making a lot of money from it. So these cloud mining contracts have just blown up. And this is really kind of an important point, I think, with like second order effects of these Bitcoin Season 2 applications. So for Fractal Bitcoin, the immediate impact has been on these cloud mining marketplaces. And we saw the impact of, the Babylon chain launch on transaction fees a few weeks ago, which was kind of, I think, in some ways easier to see coming. Like, that was kind of, you could, a
Yeah,
lot
if
of
you knew
people,
Babylon was happening, you'd be like,
yeah,
well, okay, there's a multi-block window, but the only way you knew about Fractal, if you were in the West, is if you were following block space. We've gotta really like, I gotta call this out. Like,
he's
there's
got to toot
nobody
his own
else,
horn.
nobody else covering this, and yeah, even in the West, not even that many in the East either. So
Right. And but even further than that, like, I don't know, someone smarter than me probably foresaw the impact maybe on cloud mining, but that was really kind of out of nowhere in a way, right? It was
it
like,
was
wait a
out of
second.
nowhere. I'll actually say, Colin, like, I was the only person who mentioned hash rate. I call renting hash rate prior to the Fractal launch, because a lot of degens were in my DMs being like, should I buy this inscription, which like will then mine Fractal Bitcoin? Because there's a bunch of this bullshit out there. There's like the pre-runes thing, but like
Right.
we're gonna give you an FSIC inscription, just like RSIC the rune. We're gonna give you an FSIC inscription. We're gonna mine Fractal. I was like, no, guys, like the way you want to do this is you want to rent hash rate. But I did not foresee it being like the meta. That is what caught me off guard, as it being like this big of a deal.
Yeah. And it's been an interesting development. Oh, sorry, you did we just tried to show a comment at the
Yeah,
same time.
Fractal.
Fractal mining hash rate futures coming soon. God, I hope not. I don't think so. Maybe. That's a tough nut to crack. As someone who used to work at Luxor They were pioneering like hash rate forwards and futures.
A great regulated product, like one of the first of its kind, really robust. Shout out Matt over there.
Yeah, shout out Matt, Ben, Dan, all of the guys over there. I think that that's going to be a difficult thing to do, and it's been hard enough to get them for Bitcoin mining. I don't think that we're going to see these for Fractal, unless some, I don't know, maybe
Bro,
some
what
DeFi
I just I
degen
mean, I'm
does
just
it.
saying, like, what if you have literally no rules or laws?
Yeah.
I mean, let's say
you just ignore the CFTC.
Bro, a simple front-end website in a gray jurisdiction can match orders for a long time until it can't. But I wouldn't be surprised. I wouldn't be
Yeah. I
surprised.
mean, it could happen. But I don't know, no, I'm not going to get into that because you can't compare it, right? It's just like it's not going to be like the structured products that we've seen coming out of some of these more reputable shops.
Yeah.
But never underestimate the human proclivity to bet on literally everything. I mean, I think
Bro, and
Polymarket has shown this the most. Like you'll go on there and it'll be like, will Trump say, commie Kamala during the debate, or is Kamala going to say, threat to our democracy? It's like, is Kamala going to say pickle? I mean, some of the things that they put on these prediction markets are crazy. So honestly, to your point, Bitflow, and to your point, Charlie, I wouldn't be surprised to see it if it were some, DeFi unregulated application for these
yeah.
features. So
So I got some air conditioning guys here outside my apartment, and they're gonna come bursting in and ruin the stream. So I want to wrap this up in the next like 2 minutes. Final thoughts, Colin. We've shit on Fractal a lot, but my final thought is like we have not had this much fun analyzing Bitcoin mining stuff
true,
or just like random
true.
shit in Bitcoin. And this is why Bitcoin Season 2 exists, so we can riff on these crazy topics. And the thing is, it's ever more important to me. It's so obvious to me that if you're in like the Bitcoin mining game, you need to pay attention to these Bitcoin Season 2 things happening. You need to have somebody on your team whose job it is to like know the answers to these things or know like where to look, because this is starting to impact like the bottom line of a lot of these big companies. And I think this trend only continues. That's my takeaway.
Yeah, I mean, to your point, if you were ahead of the curve here and you decided to rent out your hash rate on NiceHash or on some of the other cloud mining marketplaces, you're making currently, at least 2x above spot hash price. All of this stuff is in conversation with what's going on the Bitcoin main chain at this point. I think a lot of the developer share, a lot of the mind share, a lot of the market share, a lot of the enthusiasm, dare I say the vibes that are being cultivated in Bitcoin are outshining all of the other networks currently. Last bull cycle, it was about, L1s like Solana. It was about DeFi summer on Ethereum. A lot of that's coming to Bitcoin now, and that's going to have an impact on everything in the ecosystem. So I agree, Charlie. I've never had as much fun shitting something or just talking about something, because honestly, in the Bitcoin mining ecosystem over the past year, especially since the halving, it's like, oh, well, hash price is hitting a new all-time low. ASIC
Somebody
prices
did
are
somebody
dropping.
levered up, it got
Yeah.
more money, and then somebody buys Bitcoin. You're like, somebody bought 100 million of Bitcoin. I don't care. But
Yeah.
like,
This is fresh, and I'm going to give it to the Fractal Bitcoin team for that. I may think that this is convoluted. I have no I have no projections as to where this will go, whether it'll be good or bad. I'm very kind of neutral, verging on bearish on it, but it's fun. It's interesting, and I'm happy that we have something like that to talk about. Not financial advice. Don't lose your life savings on Fractal Bitcoin, and if you do, do not blame it on us.
yeah. So we're not shilling Fractal Bitcoin. We wrote all about it. Make sure to go and read all those. Blockspace.media to read the previous newsletters. Bitcoin Season 2 on YouTube and Twitter to check out previous episodes. Again, I recommend the episode I did with Lorenzo of Unisat, the architect of Fractal Bitcoin. And make sure to hit other Blockspace stuff. Like we continue to be ahead of the curve and have angles and insights that you don't see other places. So shout out
Follow us
Blockspace.
at Blockspace Pod. Follow the Mining Pod. Follow CB Spears on Twitter. Follow As I Lay Hodling. Subscribe to the newsletter on blockspace.media. And everyone have a beautiful weekend. We will see y'all hopefully next week, but we'll see how Charlie's traveling schedule pans out. Thank you
Bye.
very much.